Good morning. Today is Friday, December 19th. Let's take a look at a couple of the ETFs that I've been talking about the last week, and I've been talking about this market probably rallying nicely here at the end of the year, and we've done exactly that. As you recall, down here at the SSO, remember the SSO? I told you that the SSO was an absolute perfect setup back to the 38.2% retracement from the mid-October low up to the all-time high right in here. Pull back beautifully to that 38.2. Look at 119 and a quarter. Look at where it's at now. 127, 128.79 is where it closed, and it looks like we're going to open up about a point higher at 129.79 roughly. So what a phenomenal trade that has been. About a 10-point trade there. I've also been talking about the Russell, the IWM ETF, and again, it looks just like the S&Ps, right? It's just a small cap. But again, this market has not been testing the all-time high on this ETF is back here. So, but we were looking at the shorter-term high right in here. We've bounced up to that high as well. Another beautiful trade. Remember oil, OIH. We went long down in here at 35.15 based on this engulfing pattern. Now, this engulfing pattern isn't bullish or bearish. It's pretty much neutral to actually bearish. But I saw a very, very low-risk opportunity by buying it here at 35.15 with the stop right below the low. So this is your R, right? Whenever I talk about R, that stands for risk. That's our risk. And remember, we want to try to make as many R's as possible on a particular trade, right? We want to make multiples of that, right? The reward to risk is important. And so we're looking for this market. Well, my first objective was 37 even, and that gapped higher than that yesterday. So we exited half of the position at 37.08 yesterday. We're down at 36.42. The remaining portion of the position is sitting below yesterday's low now. So we're locking in about, I don't know what it is, 48 cents on the remaining portion of the position. And we've already made about 2 points on the trade. Just under 2 points, about a $1.90. Okay? And that was pretty much picking this bottom, but it was based on logic. It was based on probabilities. And it wasn't just hairy-carry buying it. Okay? Again, one of the reasons why I decided to buy that is because it pulled so far beneath that blue action zone that it's not normal for the market to typically pull back that far below it without at least touching it. As you saw here, the same thing pretty much happened, right? And what do? We snapped back in between the blue action zone before coming back down again. This is what we're anticipating here. So I would minimum expect the market to go probably about 38, maybe a little under 38 before the market comes back and tries to retest. Okay, so what we're doing now is we took some profits off the table. We're locking in profits on the remaining portion. So regardless of what happens in oil, remember this is OIH, it's the Market Vectors Oil Services ETF. And so that's been a good trade as well. Remember the last couple of weeks I've been pointing out CURE, C-U-R-E, the Healthcare Bull 3 times ETF, and DRN, which is the Real Estate 3 times ETF. And take a look at these two markets. The DRN, again, just really rallying, right? Came down beautifully and bounced right back up, and now we're through those highs. Same thing for CURE. Looks very similar to the SSO. But again, these are great trades. Hopefully you took part in some of these trades. You have a great day. Let's make some more money and have a phenomenal weekend. I'll be back with you on Monday. Bye for now.